Hey everybody, welcome back to the channel. Hope you had a great Thursday. Things got out of control in the stock market early today. Right about after I finished my pre-market video this morning, Robinhood and other retail brokerages restricted trading, plummeting Gamestop right away, and other stocks along the way like BlackBerry, AMC, Bed Bath Beyond, basically every stock I talked about, all the Wall Street best plays. And as you can imagine, this sent ripples throughout the stock market. A ton of people are voicing their opinions, from Dave Portnoy, AOC, Ted Cruz, Donald Trump Jr., Musk, Chamath. Just about everybody is getting involved. Everybody has all their eyes on the stock market, and there's a lot going on. And I think what's really happening is a lot deeper than people realize. And the real problem showed itself yesterday with the massive drop in the indexes, dropping 3%, as you had a huge sell-off in all blue chip stocks. So like Apple, Facebook, Microsoft, all those had great earnings, and yet they still dropped. Apple hit new all-time highs and then dropped almost $15 yesterday and then bounced back today. So how is that all related to what's happening with the short squeeze on GameStop and these other companies? I think Chamath had a good thread on it that we'll dive into and talk about, and I think that it's a legitimate concern going forward that the big institutions are afraid of more of these short squeezes happening, because what would happen would trigger a financial meltdown, probably worse than in 2008, which so many of these Wall Street best people lived through, and that's why they don't have a problem with sticking it to the man today. Right now, it's not about losing the money, or as you can get on Wall Street Bets, we'll get on there too, about people holding the line, right? Not selling, holding the line. They don't care about losing, $100 when they've been poor their whole life, right? So they're living paycheck to paycheck, and guess what? Tomorrow morning they're going to get up and go back to work. They're going to work a 9 to 5 and continue on with life, while these hedge funds and billionaires, they might have to sell a home, they might still have to sell a boat, or something frivolous and extravagant that the average person could no way possibly fathom. So let's dive into some articles here on ABC News here. Robinhood abruptly restricts transactions for GameStop stock. They also restricted a lot of other ones. AMC, BlackBerry, Bed Bath Beyond, Express, GameStop, KOSS. KOSS dropped from like $170 down to $20, which was absolutely ridiculous. I've never seen something fall that much before, and that's obviously not natural, and looking at the chart was definitely manipulated. Naked and Nokia, and then they also put out some different ones later, like they restricted American Airlines, right? So one of the top 5 largest airline companies in America, an average American could not place a buy order on American Airlines, which is absolutely ridiculous, right? And even pre-market, it ran up to $28 because people on Wall Street Bets have been long on it for a long time, talking about the company coming back, its fundamentals, actually doing its research, send it all the way up. And then today, I think it had a range, from 21 to 16 in open hours. So big sell-off there, as people weren't allowed to buy. So let's talk about what restricting transactions to these stocks did, right? So they allowed open positions to be sold, but you could not buy or create a new position. So they literally broke the supply and demand chain, right? So they literally restricted demand. So there's zero demand and there's a ton of supply. So so naturally, if you have a ton of supply, right, the price of something is going to drop because it's cheap and it's widely available, and so the price will plummet, right? So you saw that immediately as these stocks were restricted. Price immediately started plummeting right about 6 o'clock today, and then during the day, GME, GameStop, had its massive plummet. Here, I'll pull that up here on the chart. But so if we had GameStop today in the morning, right, so here's when Robinhood announced they were restricting it. Then come 7 o'clock in the morning, the next hour and a half, sold off from 480 all the way down to 120. And even people on Robinhood were posting things onto Twitter and Reddit showing that Robinhood force sold their shares. So which is something in Robinhood's terms of agreement that they say that they can do, but whether that's necessarily legal will probably be challenged. Like there's class action lawsuits already being made against Robinhood. Just because something's in their terms of agreement doesn't mean it's legal. So that'll definitely be challenged. But one person posted a tweet that they had almost 400 shares and it sold at $118, and so they literally got sold. Their shares literally were sold by Robinhood in this high volume tick, which is the lowest candle of the day. So they absolutely got screwed by Robinhood. So there's a lot of things that were done very shadily, amoral. I mean, should be definitely criminal, but we'll see what happens with that. And Robinhood's going to be in a world of hurt, right? They're going to be trying to IPO here in the this next upcoming year. After hours today, they said that they're reaching out for lines of credit, and so there's going to be a mass exodus, right? They knew that they are going to lose a huge part of their customer base, right? They basically saved hedge funds at the expense of their entire company, right? I wouldn't be surprised they fall under claim bankruptcy or somebody else buys them off, right? It's just I don't think sustainable. They might become the most hated company in America over Comcast and Monsanto, especially when you have both sides of the political aisle having a gripe with the entire situation. So, but Robinhood wasn't the only brokerage that restricted trading. TD Ameritrade did, E-Trade did, Interactive Brokers did. Interactive Brokers CEO actually went on CNBC and basically I'll link the video to it, but he literally says that they started restricting accounts and liquidating option positions for our Interactive Broker users to protect them to their Apex, their clearinghouse, basically, of how money gets exchanged. Like they have, the SEC requires that these companies have a certain amount of money to protect themselves. Say something does happen in a situation like this where they can route money to the clearinghouse and back between users, but instead of doing that in this situation, they liquidated accounts to protect themselves. So that's pretty shady there, and that's probably a rationale that other companies were doing too, looking after themselves and not their customers. So if we go back here to the internet, here's Robinhood. This blog post was just put up about an hour ago or less. You can read through it here, but I think their reasonings here, kind of fluffy, try to pull little heartstrings on it, but they say like here it's like a risk management decision, and it was made not at the direction of market makers we route to. And Citadel Securities came out right after this was posted saying they didn't pressure anybody into doing anything. Whether or not that's true, we wouldn't know without a investigation, including subpoena power to find out all their communications with each other. But I think this last paragraph is pretty in bad taste, especially with what they did today. We stand in support of our customers and freedom for all retail investors to shape their own financial future. How can they shape their own financial future when you force them to sell their shares that they didn't ask you to sell? So that's a bad taste right there. And democratizing finance has been our guiding stars since our earliest days. Well, he didn't follow that star today, so a lot of people are going to be pissed off. They're going to be the mass exodus, and I think really just this blog post too is just a slap in the face if you actually know what other parts of Robinhood's business. So they actually do digital currency exchange, and there's far more risk involved in that than your typical stock market day. So to me, a lot of this comments is BS, but everybody has their own opinion, so you can read through it. I'll link it, and you can form your own opinion about it. But obviously, like in the stock market, a lot of people had a bunch of opinions. So Mark Cuban talked about it earlier this morning. So Robinhood and Interactive Brokers into trading in Wall Street bet stocks because they're losing their asses on the trades, or maybe they don't have the cash to enable the trades at this scale. So that comment on the cash there is exactly what I was talking about with the SEC requirement of them having money to do it. And then Interactive Brokers decided to liquidate accounts instead of using it. Anyone have insights or their economics? Pretty interesting topic there when you actually get in the threads, people commenting on it, but I won't go into more than that. And then of course Elon Musk has to get some words in here, as he's a notorious hater of short sellers, and rightfully so for what they did to Tesla. I mean, look at what happened, where Tesla's sitting now, and he proved them all wrong. But he makes a great point here about short sellings. So when you short sell, right, you're borrowing shares that you don't actually own until a later time. So it's just, he says you can't sell houses you don't own, you can't sell cars you don't own, but you can sell stocks you don't own. This is BS. Shorting is a scam. Legal for only vestigial reasons. So I mean, he's completely right there. Something to think about going forward in these congressional hearings. I'm sure they'll be considering restrictions on shorting. I've seen other people talking about maybe having a shorting tax on hedge funds, but I think it'll definitely, whatever they do, will eventually curb it, especially to the point of shorting something over 100% of the shares available. And then his latest one was, "Here come the shorty apologists. Give them no respect. Get shorty." I think he's just talking there about all the talking heads that'll go on CNBC and other news outlets talking about the situation and painting the whole scenario in a biased light to the American public who's not informed about everything that goes on about Wall Street. So we'll go to Chamath here. So Chamath is one of the few people that's gone on CNBC and other news stations and backed the average Reddit investor, or just the average retail investor. But he has a great thread here. It's like 14 parts. But the biggest thing is basically these first two, about how he's talking about smart money, or the hedge funds are able to become incredibly leveraged with the money they have. So they have $1, they can leverage it up to $15 plus, and then they can basically use that to both go long and short. So really, they're, say, $1 risk, which you think is $15 a risk, is really double that to 30. And so biggest takeaway I get from down here is this 13th point is, now a massive short squeeze starts. You have to cover your shorts ASAP, but the banks also notice that you don't have enough credit to cover the $30 that they lent you and ask for more collateral. You now also have to sell your long positions. And this is what it looks like. So this is just an outflow of the last 3 years, the big one. So fourth quarter 2018 was a big pullback, especially that was, I believe, when Jerome Powell said that they were going to look at increasing rates. So every time there's a contraction in monetary supply, you'll get a drop in the stock market just because liquidity is removed from the market. So if we go back to Thinkorswim, figure out this OBS thing, still learn it. So if we're here, right? So this was that first period of fourth quarter 2018. So right there, that's a 21% drop in 83 days. September 2019, not as big as a drop, but still 8%. Then obviously the biggest drop from March 20th, 2020, right? Coronavirus, beginning of the pandemic, it's a drop of 36%. So I think what really these hedge funds are scared about is that they are so over leveraged that if more retail investors or more people gang up seeing of what these companies are shorting, because shorting is public information. You can find that online. You can find Yahoo Finance, short squeeze websites, but it's public information. It comes out every month. As more people get targeted on these shorts, these hedge funds get targeted on the shorts, they're forced to sell their long positions as collateral. So I think that's what happened yesterday in the big red market, as big red day in the market, as it was basically an entire sell-off all of Wednesday. So if we go back again, so I'm farting around with this thing. So this is yesterday, so this is Wednesday. Starting from here on, this is a futures contract, ES. So for the S&P 500, right? So you get the entire day basically a drop, right? So huge sell-off, right? And then after hours, you get a nice low, and then you come into today when very early this morning, 1 to 2 a.m. when GameStop hit its 513, we have another low. And then first thing this morning, once it's probably news starts to get spreading that they're going to restrict these stocks to retailers before the news actually broke, we get this uptrend, right? And then we get this uptrend all morning and starts bending around 9, 10 o'clock, and then we get a later sell-off, right? And why could there possibly be the sell-off in the afternoon if that's also part of the reason? Well, Webull and other retail investors said that they fixed their problems with Apex and were allowed to allow people to buy GameStop, AMC, and all these other companies again. And so that's what I would correlate this market sell-off to here, even when after hours right now. So after hours, right? So after hours, we're still down about 11 points right now on the futures contracts when Novavax just released that their coronavirus vaccine was 89% effective, so that you would expect news like that to be a positive sentiment to the market, but no, we're still down. So I think there's underlying things happening right now that a lot of people on Wall Street are definitely worried about, especially considering the hate that everybody still holds on to them for the 2008 debacle. Something like that could definitely happen again with a scenario like this where all these hedge funds are getting margin called and they're forced to sell all their long positions from being so over leveraged. So I think there's going to be a lot of uncertainty in the markets in the next weeks to come. I definitely think tomorrow's going to be a very interesting day again for these Wall Street bet stocks, especially GameStop, because GameStop has over 200,000 call options that will be expiring tomorrow. So those have to either strike or be played. So that's 20 million shares right there. They'll need to be bought and squeeze up. And then these other, even Robinhood said that they will allow limited buying tomorrow. So what will happen with the demand? Are people going to keep buying it tomorrow? So I think it'll be a very interesting scenario again for what happens tomorrow. I think this is kind of like an unprecedented scenario, and what happens tomorrow is kind of going to dictate the future possibly going forward for a lot of these retail investing, hedge funds, everything. I think it could definitely cause a ripple effect to wider market changes moving forward. So that's all I have in this video. If you agree, disagree, let me know down in the comments. If you got something out of this, please let me know. Like, subscribe, do all that good stuff. And if you want to continue the conversation in the comments or on my other social medias, those are linked on the description. And we'll see you in the next one.